Are you ready? Are you ready?
So with let's get it on.
Well, that wasn't very enthusiastic.
No.
Are you ready?
What did you call it?
I don't know if you're trying to get me to play back, but I will not be.
That's right. You just gave the head nod. You didn't say anything. Got your mouthpiece in. You just
Ready to go.
Hey, welcome to the closing beat, everybody. Happy Tuesday. How we doing out there? Welcome to our new studio here. It changes every day, by the way. Every day we're putting a little something up on the wall, either to share something that someone's sent for us here, just being nice, or things that we've created. That's actually a creation of mine, thanks to Charlie's wife. Actually held a little party where we painted pieces of wood and stuff, and I thought, well, I'll make my own thing. So that's my own artistic creation there with the help of Charlie's wife, who sadly has COVID right now, so she is down for the count. Welcome to our show, by the way. We're in the middle of redoing the whole studio and everything, and so it's a work in progress, but it's going well so far. The Wine and Wealth classes for our clients still will continue. This week, we got a really, really good one. The odds of profitability over any set amount of time. We studied every single period in the market, and not just saying like from this week to this week. We actually went from this week to this week, then skip a day, from this week to this week, from this month to this month, then skip a day, then this month. So it's every single rolling time period in the market since 1928. We're going to cover that this week in Wine and Wealth. Hope you join us there. In our research site, if you want to join, you can actually join our research site. It's $13 a month. It's free for clients. If you want to check it out, it's in your dojo already. But if you want to join, $13. If you can't join us here, don't want to, we've got top dividend stocks in there, which have shown some actual relative strength. And then we showed the top dividend stocks that have pulled back actually for you. So I gave you a list of stocks to look at there. As far as the stock market goes here today, well, the month is over, right? It's another month. That's 7 months in a row of gains. Is that odd? It's maybe a little bit odd there, huh? We actually have the market basically sitting at all-time highs if you're looking at the S&P, and we have a fun little game going on here in the office. There is an office in our new studio here that me and Cody both kind of like, so we had a friendly bet. I bet that the market would pull back 10%, and if it did, I get the office. He bet that if it does not pull back 10%, does not think it will, then he gets the office, and here's what it looks like so far. We have the office that nobody's allowed into at the moment. We put a few things up there that a few people have sent for us as office welcoming gifts. You don't have to send us gifts. Thank you, though, for those who have. And we're going to start filling up the office with stuff because we got some more stuff here today, actually. And whoever wins the office wins the stuff as well. So we'll see. We get a 10% pullback or not. Judging by that bottle on the left, I am hoping I am correct there. Anyways, looking around the markets here today, you can see slight pullbacks, basically a flat day. I won't really say there's much to gain from today's knowledge. End of the month, and we end on a strong note, basically up at near highs. So nobody's really willing to take any action or sell anything or buy anything new. Just kind of waiting. And like clockwork around the world, the central banks are starting to say, hey, we're talking about tapering. We started tapering, Italy tapering, or raising interest rates. You've got Austria, the ECB, all starting to talk about this in addition to the U.S. here. So that's how you know it's coming. They're all working together now to get everybody comfortable with the idea that free money is slowly going to go away. If we look at the NASDAQ here, it was the best this month so far, best this month total for August, up 4% there. Also took first place year to date over the month of August there, just edging out the S&P with a gain just over 20% actually. China stocks continue to rebound here, which is good news for a lot of you that bought the dips there. You got Pinduoduo looking strong on the day. Not really much else other than that. JD.com strong back to the 200-day moving average. You got Baidu higher on the day. A couple standouts here in the NASDAQ if you're looking. You've got the Alibaba, a little sluggish, but coming off lows as well. The worst ones for the month actually were Zoom and Peloton. They both were basically down 20%. Zoom, naturally, a lot of that happening today. But worst performers there, Zoom and Peloton, if you're looking throughout the month of October. For basically 20% apiece for each of them. Mercado Libre, if you're looking at them, and Trip.com had the best performance overall. Trip.com really spent August recovering, so it's not like it's a strong stock anyways. But it added about a third of its total month gains actually just today in this last day here. Second best performer in the NASDAQ. If you look over at the S&P 500, second place year to date, half of the gain, or in second place for the month actually, had half of the gain as the NASDAQ there, about 2%. It was held back this month by MasterCard, which continues to pull back there, down about 10%. Visa working on that 10% pullback. Today losing another 1%, down 7 overall for the month of August there. In the S&P 500, you actually had 50 names that lost 5% or more. 1/10 basically. Despite hitting record highs here in the S&P, we had 50 names lose 5% or more. There you go. Historically, by the way, if you look at September, so this is just current performance, but historically, if you look at September's performance, take every single first day of September, then give me the average. Every single second day, give me the average. Every third day, give me the average. And plot that sort of intra-month performance of the S&P. The first 10 days and the last 10 days tend to be the weakest. So if you're going to get any action, historically, that's where it is there. September has the best return overall when it's already up 10%, so that's good news for Cody in the office there. That's the only time it averages a gain. So if you take every September where leading up to it, the stock market was already up 10% or more, then you average a gain of 0.05%. There's a gain, right? No pullback there. The worst is when it's down year to date, which we do not have this go around here, but when we're down into September averages a loss of 2.64%. So that's good news there if you're looking for the markets to continue. If we look at the Dow, there you go. The Dow comes in last place in August, but still added 1.5% on the month. Visa, of course, was one of the ones that held you back there if you're looking through the individual stocks. You got Amgen. Also, one of the holdbacks for the month, and Boeing. These three were the biggest contributors or biggest drags on the Dow here so far, or for the month there. The excitement was with Goldman Sachs. We happen to own it, so we're happy to see that. Salesforce.com, second place, we own that, so we're happy to see that as well. They both added about 10% overall. When you look at the Dow is just itching to make a new high, isn't it? But it hasn't done it yet. So if you're playing Guess the Dow, you're looking pretty good if your guess was somewhere in this range right now, and Cody's going to give us the update.
Yep, we got a new leaderboard today. Your top 5 are Silk, Tate, Joseph, Sanaya, and our boy Jerry Liu is on there for the 3rd straight week. He's managed to end up on the leaderboard. Hasn't won recently, but he is back on our leaderboard for the 3rd straight week. He knows something. It's jazzwealth.com/guess the Dow if you want to play for next week.
Well, Jerry's hunting, man. He's sniffing around that leaderboard there. I like that name though, Silk. That's a cool name. You got Silk in first place. Well, good luck to you guys, and good luck, Silk, if you're playing, going to hopefully win. I hope you win. Cool name there. Let's go to the sector breakdown here for the day and take a look at what's going on. 10 of 11 sectors have had 10% gains year to date. The only one that has not had a 10% gain this year is consumer staples. It's not far off, about 8.5% there. 5 sectors have 20% year-to-date gains. Impressive there. Real estate in 3rd place, actually. The S&P sector here with about a 30% year-to-date gain. There's a handful of them right there at the top. Biggest contributors year-to-date so far, if you're looking, you got American Tower, and hit new highs here today as well. There you go. You got Extra Storage Space, Iron Mountain also sitting at highs as well, and Simon Property were the biggest gainers. We own all of them, actually, besides Iron Mountain, so we missed out on that one there. But other than that, looking good in the real estate sector. Communications Services, 4th place year to date, but the best today, actually, if you look at something like there you go. CMCSA. There we go. Comcast hitting new highs as well, and Activision and EA Sports. Activision, decent rebound off lows, added 1.5% there, and EA Sports, just a sloppy mess, but it's trying. And apparently in EA Sports, a little throw over to Cody here. I'm just going to say, Madden 2022 looks like we're getting Tim Tebow, and we're getting Reggie Bush along with a few others there. What do you think about that?
I actually just found out about that less than 5 minutes ago. That's pretty cool. I'm not a big fan of
neither one of them,
the Florida Gators and all that, but yeah, I'm surprised Aaron Hernandez isn't on that list either. He was a great tight end.
So I know enough to laugh at that.
Oh, okay, good.
Yeah, what's up with that, man? We should protest. Tim Tebow, though, you think he should be in there?
He was good in college, right? He was a good college player. He didn't do much in the NFL, but he was a good college player.
Yeah,
so, yeah, he should be on there.
You want to root for the guy, though. Yeah, I like the guy.
He's a nice guy.
All right. Well, anyways, that's what's going on there with EA Sports if you happen to be looking around in the communication services sector. Let's go over to basic materials here real quick. Not much today. Middle of the pack year to date, also kind of middle of the pack today. Well, towards the bottom of the list there. You got about a 20% gain year to date. And, actually, it finished worse today as the worst performing area. Thanks to Nucor, down 3%, and then also Dow. Dow pulled back as well, just about 2% there. Those were the ones to blame. However, Nucor, it's up 120% year to date. Can you blame it for pulling back a little? I don't think so. Energy down a little bit today. It was the worst this month. You could probably guess that as far as the month of October. Lost about 1.6% there. If you look at something like Hess was the worst, down 10%. EOG Resources, I'm going quick here, also down about 7%. And Kimco, actually, I got the wrong one. Kinder Morgan I was trying to find there. Down about 6% as well. Here's something interesting. The FTC, you've asked this question. Come on, every one of us has asked this question. Why is it that gas prices go up faster when the price of oil goes up, but then when oil goes down, gas prices fall slower? You ever wondered that? Come on, you know it. When you were somewhere one day where you watched every penny on that gas price go across the street, make 2 left-hand turns to get a penny off gas. Am I the only one? Anyways, the FTC is going to crack down on that, man. They're going to be looking at unlawful gas prices, in particular, why gas prices rise faster with a rising oil, but decline slower with declining oil there, right? Nothing better to look at. Let's take a look at that. It has nothing else to do with any other policies our country has put in place. No, it's the gas station's fault, right? Nonetheless, I'd like to see what's the result of that. Why do gas prices go up faster and then go slower during lower oil prices? Huh? Why is that? Does it have anything to do with the gas that they already bought that they're still going through? Does it have anything to do with capitalism? I don't know. We'll see what happens there. But I just thought that was funny because it's one of those things I've always wanted. You always say it to your friends and stuff. You know why, but you say it to your friends and you're like, someone should look into that. Well, they're finally going to look into that there. So there you go. Let's see if we get an answer, if they actually publish it. If they do, we'll talk about it here. But let's go to new highs and new lows for the day. You got Philip Morris, uneventful breakout, which is fine. It's a dividend stock, slow and steady, all of that good stuff. Just an uneventful, slow and steady breakout. We talked about Comcast already. Very strong day for that one there. If you look at the NASDAQ, nearing 50% gains year to date, also making a new high. That's a beast. And actually, I'll go over to S&P. S&P is hinting at a little breakout there as well. And that was on our list there. It is on our list. So also in that same kind of area, looking good there. We'll look at Equinix real quick. We happen to own this one here, but Equinix looking to break out as well. It's trying to play catch up with the other REITs. It's a little bit of an underperformer compared to the others. American Tower, Prologis, and things like that. Still a great year, but just kind of an underperformer there. It's up 20% year to date and hinting at a breakout there, so maybe that helps. You remember Synopsys we talked about the other day, that big island gap move. So island gap higher, you expect follow through from that. Momentum, it's the way it works there when you have this gap to no man's land. You got a few good days out of it, and I started mentioning it looks a little bit oversold. You got a few extra days out of it there. Now it looks like it's starting to pull back just a little bit, so kind of an honorable mention there. So here we go. Let's take a look at stocks in the news. Zoom comes out with earnings there. It does $1 billion in revenue for the first time there. Shares are lower because they say our existing paid subscribers that have less than 10 employees are going back to work. They're using other means. They're using Google Hangouts. They're using WebEx from Cisco. And Cisco, by the way, has been an outperformer compared to Zoom. It's pretty clear by looking at the chart there. So with a couple things there, and the fact that they lowered guidance, you've got a recipe for Zoom, people to just think, all right, it's over. You guys had some fun. The virus is hopefully going away. Everybody's going back to work. We don't need Zoom as much. Moderna added 1.6% today, now has 2.6 million COVID shots that were rejected by Japan, actually. 2 deaths. They found foreign substances in the vaccine there. Don't want to see that. Hasn't really affected the stock much there because it's not a large number, but that could get worse. You never know. Facebook says if you're using Instagram, you are going to have to start to submit your birthday. We're going to ask you nicely a couple times, then we're going to force you to do it in order to keep using the platform there. It is for youth safety there. They want to take your birthday. If you don't already have it. If you already have it in there, then just use that. Chewy.com. There you go. What's Chewy.com? That's earnings tomorrow, man. So Chewy.com come up after hours. We're expecting a loss of a penny. Something tells me they're going to beat on earnings, but we'll talk about it when it comes up there. And lastly, this one's for Cody as well. Whoop. You remember Whoop?
I remember Whoop. I know Whoop.
So they got they're worth $3.6 billion. Would you have guessed that?
Hey, that's great technology. I know a lot of people that really like Whoop a lot. It's super cool. I like it too. But
they raised $200 million from SoftBank, which gives them a Series F funding, which means they borrowed a lot of money. $3.6 billion. That's impressive. Like, I feel like I'm getting left in the dust, man. Maybe I should go raise some money. I don't know. Let's see. Anybody? Any takers? We'll do a Series J. We'll just skip right to it, huh? Nah, it doesn't make much sense. All right, let's take your questions if you happen to have any questions. And while we're letting the stream catch up for a second, I would point out that Home Depot paying out $1.65 earnings there. QCOM is paying out 68 cents, and I believe Shutterstock is paying something out as well. I don't remember the amount. It's not a lot. Shutterstock, 21 cents, which is yeah, right in line basically with last quarter. There you go. Oh, you want to pick on some Alibaba now? There you go. Yeah. Got a little vaccine stock there. You like Alibaba on the pullbacks there? I can't argue with that. You know what I mean? There's more and more pullbacks out there that are shaping up, but Chinese stocks are the obvious one. That regulatory stuff. I know President Xi met over the night or our daytime there with some of his leadership about further regulation, some things they wanted to do. I think the bulk of what they're trying to do is over with. They've made it clear what they're looking for from these tech stocks here. But I wouldn't say the coast is clear, but you got to feel like that. Come on, that's got to be somewhere close. I think anything they do from here would just be fine print. You know, just putting the final touches on everything. That tech regulation is hopefully mostly in the past there. Mm-hmm. Hey, Darren says, how important would you consider level 4 options or portfolio margin defined in an account to defend an account during a downturn? That's up to you. I mean, there's obviously you kind of detail what brokerage firm you're using there, but portfolio margin, most places are like 110, 130,000, somewhere in there. But you got to know what you're playing with there. It's a whole different thing. It's not just based on that position. It's a risk-based margining position. I did a class in the dojo. I think it's called the 3 types of margin, where we talked about from the simple all the way to portfolio margin, and really tried to define what that is. I would prefer it, to be honest, because you very quickly could figure out how you could offset your risk. But it's one of those you definitely need to know what you're doing or have some comfort there. Mm-hmm. So to put on Las Vegas Sands, catch, move up, bought back after a run up, the best way to play a stats play like that. You can, yeah. There's no right or wrong way there. The wrong way is the way that doesn't make money. But you chose to do it in a way that you just wanted less risk. You were okay owning the stock a little bit lower or wherever you sold the put at, as long as you didn't sell a put like in the money or something like that. I'm assuming you didn't do that. Covered call ETFs or write your own. It depends. You can participate in those, but if you are one of those that likes to look around for higher premiums and stuff and play that game, that's fine. Keep in mind that the covered call ETFs, it's set. They're just using the index, whatever index they choose. Let's say it's the SP 500. They're just going for all those stocks and then selling calls against the index, not against the individual stocks. So it's a little different game versus someone saying, I'm going to go to Las Vegas Sands and I'm going to buy the stock and sell a call. They're 2 different animals there. Yep. Miriam's, she's retired there. How often should you take a look at your portfolio and consider changes? Well, you could set alerts based on percentages. One of my favorite things to do is say, I want to know when something gets out of a 2 or 5% range, and just because it's free and we'll rebalance towards it. That's probably the bulk of what you would look at. When markets have extended moves like this, or during the virus when they had that big meltdown, those are obvious times to do it. But otherwise, you could say, tell me when I'm 5% away from my target allocation. Yeah. So You could argue that most of this year probably has gone by. You wouldn't have missed much if you were looking to rebalance. Summertime especially, no need to look there. I mean, but I don't know that it needs to be on timeline. We actually did a whole class on that to say, what's the optimal rebalancing time period there? And you're better off if you don't rebalance more, which is went against everything I ever believed. Yeah. I know, right? Quarterly, it's some people set a clock or a little calendar to say, yeah, there we go. And that's how they do it there. Any thoughts on some recent stocks that did 2 dividend raises in the same year? You could look that up pretty easy. 2 dividend raises this year or just at some point in some period of history? Like if you're saying this year, that list would be a lot smaller. Maybe a few banks, regional banks maybe? I know they did earlier. Yeah. Wow. You look at it, you got a fan. They're looking to know, they want to know how you did the LVS stats play there. Mine was a little bit. Or are you asking me? I don't know. What the question is there. I don't know why that's messed up. Why is the real estate sector performing so well in your opinion? It's kind of like, and lately consumer staples as well. I think people are looking a little bit more defensive and dividend yield type plays there because you have inflation just gone. So think of all the people that say, I have money in a savings account, it's losing 4 and 5% now just sitting there. Could I take a little risk and go somewhere? REITs, utilities, consumer staples, a lot of those get popular. And I think there's a little slush of money headed that way just for that. I don't know if that's the right thing to do. But people are saying, I'm not leaving my savings account, or leaving it in my savings account. I'm going to go try to put it to work a little bit. Could be. Where is NUE going? Well, keep in mind, it's had a big run, right? No problem with that 120% gain on the day. Personally, I think you'd love to see it back around 110 if it happened to take a break. But I would have said that months ago. It had a little pullback, but I would have said the same thing here. So maybe that was close enough. But back in here, obvious support area right around 110, 111. Yep. Doc, it would be odd that they would raise dividends twice in a year. Well, this year, I would say. Maybe other years, not so much. Share any historical data about markets performance in September? We did. I mentioned it earlier there. I wrote it down, actually. Last 10 days of September tend to be the weak spots there if you're looking. And September has the best average return, which is 0.05 positive percent, when we're already up 10%. We're going to break it down a little bit more, I think, do something on the research site to show a lot of different scenarios because September's a big month. It's easily the worst month of the year. So let's break it down, see if there's something to learn there. I love it. And I think Charlie's working on something for me. What happens when the first 7 months, first of all, how often were the first 7 months of any year positive? There's going to be some. And then from that, what happened afterwards? What was the rest of the year's performance? Like, what could we expect, right? Was it good? Was it volatile but still positive? Did we pull back at all? Was September negative? What happened there? So we'll break that down a little bit. You're welcome, Miriam. Yeah. Rocket Mortgage, they've had better days, right? There's not. You need news of dollars, right? Anytime you'll have something like Hertz getting sued, or was it Alphabet for a while? I think Russia came after them, and then they were able to put a dollar amount to it and say you owe $1.4 billion, and this all goes away, or whatever it is. QCOM when they were fighting with Apple. That's when you see the stock move higher. Everybody always says, why did stock go higher? They just had to pay out $1 billion. Because it's a number we can quantify. Now we know the impact that's going to have on earnings, and we can justify analysis to figure out an earnings per share, figure out whether it's trading cheap or expensive. When you're in the middle of all those lawsuits, you have no idea what's going to happen. So that's why you see the stock moving sideways like that. People not interested. All right, I'm going to wrap it up there. Appreciate you guys hanging out with us. Hope you have a great rest of your day, and we'll be back tomorrow to do it all over again. Enjoy.